Welcome back to our channel, where we will be diving deep into the terminologies that are essential to help you get ready for your financial certification exams like investment funds and Canadian securities. Whether you're gearing up to tackle your exams head-on or just looking to boost your financial vocabulary, you're in the right place. Don't forget to hit that subscribe button and ring the notification bell, so you never miss an update from us. As always, remember to like, comment, and share your thoughts. Now, let's begin. Call feature. A call feature is a provision found in bond or preferred share agreements that grants the issuer the option to redeem the securities before their designated maturity date. This option is akin to calling back the securities. Such a move is typically executed by the company if it can refinance the debt at a more favorable interest rate, comparable to refinancing a mortgage to lower rates. However, exercising this option may entail paying a fee referred to as a call premium. This provision provides issuers with flexibility in managing their debt and capital structure. Call option. A call option provides the holder with the opportunity to purchase a predetermined quantity of shares at a pre-agreed price, known as the strike price, on or before a specific date. The buyer of the call option pays a premium to the seller of the option contract. This arrangement is appealing when the investor anticipates an increase in the price of the underlying stock. Essentially, a call option grants the right to buy shares at a set price within a defined time frame, and it contrasts with a put option, which allows the holder to sell shares at predetermined price within a certain period. Call price. The call price is the value at which a bond or preferred share, equipped with a call feature, can be redeemed by the issuer. This sum is what the security holder would receive if the security is called back before its maturity. The call price equals the par value or a specified value for preferred shares, along with any applicable call premium. It's essentially the amount paid to holders when their securities are redeemed early. This aligns with the concept of redemption price and provides insight into how call features influence the pricing of these securities. Call protection period. The call protection period pertains to callable bonds and denotes the span of time preceding the earliest feasible date on which the issuer can exercise its option to call back the bond. During this period, the bond is safeguarded from being called, offering a level of security to the bondholder. This concept highlights a crucial aspect of callable bonds, where the issuer's ability to redeem the bond is restricted for a specific duration after issuance, providing investors with a measure of certainty during this time frame. Callable bond. A callable bond is a type of bond that can be redeemed, or called in, by the issuer before its scheduled maturity. This redemption typically occurs when interest rates have decreased since the bond's issuance, allowing the issuer to refinance at a lower cost. When a callable bond is called, the bondholders receive the principal amount along with any accrued interest up to the call date. The option to call a bond provides issuers with flexibility but can be disadvantageous for investors if the bond is called before its expected maturity. Callable preferred. A callable preferred share can be repurchased, or called in, by the issuer with prior notice. This allows the issuer to reclaim the shares before the maturity date. Shareholders receive their investment and dividends up to the call date. This feature provides flexibility for issuers but uncertainty for investors. When the issuer decides to call the shares, shareholders receive the original investment amount along with any applicable dividends up to the call date. Canada Deposit Insurance Corporation, CDIC. The Canada Deposit Insurance Corporation, CDIC, functions as a federal crown corporation responsible for safeguarding depositors' interests through the provision of deposit insurance. This insurance coverage extends up to $100,000 per depositor, helping to instill confidence in the banking system and providing a safety net for individuals and businesses alike. By offering this crucial layer of financial security, TIC contributes to maintaining the stability and resilience of Canada's financial landscape, reassuring depositors that their funds are safeguarded even in challenging times. Canada Education Savings Grant, CESG. The Canada Education Savings Grant serves as an enticing initiative designed to encourage participation in a registered education savings plan. This program entails the federal government providing a matching grant, which can amount to a maximum of $500 to $600 per year. This grant is applied to the initial $2,500 contributed annually to the RESP of a child under 18 years of age. By fostering such educational savings, the CESG empowers families to accumulate funds for their children's future educational pursuits, alleviating financial burdens associated with higher education costs and contributing to a well-rounded and prosperous future. Canada Pension Plan, CPP. The Canada Pension Plan stands as a comprehensive social insurance program initiated by the Canadian government. This program aims to offer income support during retirement, disability, and survivorship situations. It is funded through contributions from both employees and employers, as well as the self-employed. The CPP provides a measure of financial security by ensuring a regular stream of pension payments to eligible recipients upon retirement. It plays a pivotal role in assisting individuals and families in maintaining a certain standard of living during their retirement years and addressing various life circumstances. Canada Premium Bonds, CPBs. Canada Premium Bonds, CPBs, were a secure savings product that carried the full guarantee of the Government of Canada. Although the sale of CPBs was halted in November 2017, the government has committed to upholding its guarantee and honoring all existing issues until their redemption or maturity, whichever occurs first. These bonds provided a reliable means for individuals to save while enjoying the assurance of government backing, contributing to financial stability and peace of mind for investors. Canada Savings Bonds, CSBs. Canada Savings Bonds represented a secure savings product that bore the complete backing of the Government of Canada. While the sale of CSBs was terminated in November 2017, the government remained committed to upholding its guarantee and honoring all existing issues until their redemption or maturity, whichever transpired first. These bonds offered individuals a dependable avenue for saving, coupled with the assurance of government support, which in turn fostered financial security and confidence among investors. Canadian Derivatives Clearing Corporation, CDCC. The Canadian Derivatives Clearing Corporation serves as a vital service entity responsible for the clearing, issuance, settlement, and assurance of options, futures, and futures options that are traded on the Bourse de Montréal, the Bourse. Through its operations, the CDCC plays a crucial role in enhancing the efficiency and security of the derivatives market by facilitating the smooth execution and fulfillment of these financial instruments. By providing these essential services, the CDCC contributes to the overall integrity and stability of the financial ecosystem within which these transactions occur. Canadian Investor Protection Fund, CIPF. The Canadian Investor Protection Fund stands as a financial safeguard designed to provide protection for eligible customers in the unfortunate event of FROC dealer members' insolvency. This fund is exclusively sponsored by FROC and is sustained through regular quarterly assessments imposed on dealer members. The primary objective of the SIP is to offer an additional layer of security and reassurance to investors, ensuring that their interests are upheld even in challenging financial circumstances, thus fostering trust and confidence within the investment industry. Canadian Life and Health Insurance Association, CLIA. The Canadian Life and Health Insurance Association serves as the prominent national trade association representing the life insurance industry. This organization plays an active role in both supervising applications within the industry and establishing crucial industry standards. By providing this oversight and guidance, the CLIA contributes to maintaining a cohesive and regulated landscape within the life insurance sector, ensuring that industry practices adhere to established norms and offering a collective voice for its members in matters that affect the industry as a whole. Canadian Securities Administrators, CSA. The Canadian Securities Administrators functions as a collaborative platform that brings together the regulatory bodies of Canada's 13 provinces and territories responsible for overseeing securities. Its primary objective is to facilitate coordination and harmonization in the regulation of the Canadian capital markets. Through this collective effort, the CSA aims to establish consistency and uniformity in regulatory practices, ensuring that the securities industry operates in a cohesive and well-regulated manner across the nation's diverse regions. This collaborative approach promotes effective governance and protection for investors while fostering a robust and transparent capital market environment. Canadian Securities Exchange, CSE. The Canadian Securities Exchange was established in 2003 as an innovative trading platform designed to provide an alternative marketplace for the trading of equity securities and emerging companies. This exchange offers a distinct avenue for companies to access capital markets and for investors to engage with a diverse range of investment opportunities. By catering to both established and emerging entities, the CSE contributes to fostering a dynamic, inclusive ecosystem within Canada's capital markets, promoting growth, investment, and liquidity across various sectors and industries. Canadian Unlisted Board, CUB. The CUB serves as an internet-based platform designed for investment dealers to report executed trades involving unlisted and unquoted equity securities specifically within the province of Ontario. This system provides a streamlined and accessible avenue for investment dealers to record and communicate completed transactions involving these types of securities. By offering this platform, the CUB contributes to enhancing transparency and efficiency in the trading of unlisted and unquoted equity securities, enabling accurate reporting and facilitating smoother communication among relevant parties in the investment landscape. CanDeal. CanDeal operates as a platform that offers institutional investors electronic access to bid and offer prices, as well as yields for federal bonds. These prices and yields are sourced from 6 bank-owned dealers. By providing this digital avenue, CanDeal facilitates seamless and efficient access to critical bond market information, empowering institutional investors to make well-informed decisions regarding federal bond trading. This platform contributes to enhancing transparency and accessibility within the bond market, streamlining the process of obtaining essential pricing and yield data from reputable dealers for the benefit of investors. CanPX. CanPX operates as a collaborative effort among multiple FROC member firms, functioning as an electronic trading system catering to fixed income securities. Through this platform, investors gain access to real-time bid and offer prices, as well as hourly trade data for these securities. By offering this electronic trading system, CanPX facilitates efficient and timely access to crucial information, enabling investors to make informed decisions in the realm of fixed income securities trading. This platform contributes to enhancing transparency and facilitating smoother trading processes within the fixed income market, ultimately benefiting both investors and the broader financial ecosystem. Capital. The term capital holds 2 interconnected meanings. In an economic context, it refers to the machinery, factories, and inventory necessary for producing various goods. For investors, it encompasses the collective financial assets allocated to securities, fixed assets such as a home, and cash. This dual interpretation underscores the significance of capital as both the physical resources driving production and the financial resources allocated across various investments and assets, contributing to economic growth and wealth generation. Capital and financial account. The Capital and Financial Account is a ledger that records transactions between Canada and foreign nations involving the acquisition of assets, such as land or currency. This account, along with the current account, constitutes a vital component of the balance of payments. It provides insights into the movement of financial resources across borders, reflecting the flow of investments and capital between countries. By encompassing both capital and financial transactions, this account offers a comprehensive view of the economic interactions and relationships between Canada and other nations, contributing to a holistic understanding of international financial dynamics. Capital gain. A capital gain occurs when a security is sold at a higher price than its initial purchase cost. In the case of non-registered securities, 50% of the gain is included as income and subjected to taxation at the investor's applicable marginal tax rate. This term signifies the positive difference between the selling price and the original purchase price of a security, and its tax implications are dependent on the type of investment and the regulatory framework governing taxation on capital gains. Capital loss. A capital loss occurs when a security is sold at a price lower than its initial purchase cost. Such losses can only be utilized to offset capital gains and cannot be directly applied against other forms of income. Excess losses can be carried forward indefinitely to offset potential future capital gains. However, it's important to note that only 50% of the loss can be used to offset any taxable capital gain. This concept signifies the negative difference between the selling price and the original purchase price of a security, and it has implications for managing an investor's tax liability related to capital transactions. Capital market. Capital markets encompass financial platforms where the trading of debt and equity securities occurs. This domain includes both organized exchanges and private placements that facilitate the exchange of these types of securities. Within capital markets, investors engage in transactions related to both borrowing, debt securities, and ownership, equity securities, of financial instruments. These markets serve as essential channels for companies and governments to raise capital, while also providing investors with opportunities to allocate their funds across various investment options. Capital Pool Company, CPC. A capital pool company is a type of company that is authorized to pursue financing through an initial public offering even before having any assets or active operations. The funds obtained from the IPO are utilized by the CPC to assess and potentially acquire an established business or substantial assets as part of what's known as a qualifying transaction. This unique structure allows CPCs to access capital markets and raise funds, providing them with the means to identify and invest in promising business opportunities, ultimately leading to the development and growth of the acquired entities or assets. Capital shares. Capital shares are a constituent of split shares, a financial instrument structure. Within this arrangement, capital shares are designed to receive the larger portion of capital gains generated by the underlying common shares. In split share structures, capital shares and preferred shares work in tandem, each catering to different investor preferences. Capital shares are structured to capitalize on potential capital appreciation, making them a key element in split share offerings that aim to provide investors with a balanced approach to returns by differentiating the distribution of gains between the two types of shares. Capitalization or capital structure. Capitalization, also known as capital structure, pertains to the aggregate monetary value of a company's debt, preferred and common stock, as well as its retained earnings. This encompasses the entirety of the financial resources invested in the company. Capitalization can be measured in either dollar terms or presented as a percentage, reflecting the proportional composition of debt and equity within the company's financial structure. By assessing capitalization, stakeholders gain insight into how a company's financing is distributed across various sources, providing a comprehensive view of its financial health and risk profile. Capitalizing. Capitalizing involves initially categorizing an expenditure as an asset on the statement of financial position instead of an expense on the statement of comprehensive income. Subsequently, the asset is either gradually expensed through amortization or written off over a span of years. This approach is frequently applied to costs like interest, research and development, which are recognized as assets before being systematically expensed over time. By capitalizing certain costs, a company can more accurately reflect their impact on the balance sheet and income statement, contributing to a more comprehensive depiction of financial performance and resource allocation. As we wrap up this session, we're thrilled to have embarked on this journey together, exploring the foundational terminologies crucial for acing your financial certification exams, including investment funds and Canadian securities. Whether you're preparing to conquer your exams or aiming to enhance your financial lexicon, our channel is here to empower you every step of the way. If you found our insights valuable, remember to show your support with a thumbs up and extend the knowledge to your fellow learners. We trust that these insights will prove indispensable on your road to success. Stay tuned for more enriching content, and remember, your financial expertise is just a click away. Now, let's begin.